Alright, so I'm gonna go over the Dow and do my trend review, see what happened. So basically, this today is really important because today I think it seems like a base has been set up on higher time frames, and it is significant. It is definitely significant. And so let's just take a look at the higher time frame for a sec. There was, market had reached a definitely overbought position up here. Alright, you can see all this volume, so you could call it overbought or you could call it climactic, but the point is, too much greed, that's what happens. Alright, so now you have the market up here, and overbought really means it goes up too far too fast without correcting. So it's, you want to see market go rally and then react, rally, react, rally, react. Not just rally, 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 rally. Like this was meant too many bars straight up. So reached an overbought condition right here. And the volume is very significant. This is telling me that this is a bottom climax. So from that point, there was a slight reaction, and it went up. It went from 75 to 6. 75 to 6. Like what gives? See that? So when it did that, it was saying that demand has been spent. There's no more demand to take this higher as the higher high is made. There's only 600 contracts. So you have climactic action, and I guess you could consider this a low volume secondary test, or whatever, but the point is it may try to go higher and there's no volume, meaning the buyers are gone. Okay, then there's another attempt here, then there's another attempt here. You get 600 contracts, 600 contracts, 700 contracts. It pulls back on 24, which means there is somewhat of a pullback. Then there's another attempt, and you only get 6. The force of demand has diminished. The force of demand has diminished because you went from 75 to 6. That's a 1 to 12 ratio. So demand is spent. It's unable. It's gone, basically, up here. Okay? And there are multiple attempts to take it higher. What you have is a shortening of the thrust. Then you have these clustered closes. And then basically just no demand up here. And no demand. And then the key bar that broke this range is right there. This was the thrust that initiated this action right here that you see. So this was the break. This was the bar that made the break. It had follow through, and again you're testing with no demand, because the smart money's not going to buy up here. They're going to buy low, sell high, not buy high. So again, no demand, pulls back to test. When it tests, this is very important because I believe that this was the accumulation. Basically long positions were established by smart money right here. You see? You had the climax, and then activity basically died, supply came in, and bang, 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 and then boom, right there. Off of this level, accumulation occurred, and long positions were established here. I mean, I guess you call it preliminary demand or something, but the point is that the buyers came in. Okay, and these are 4,500 contracts. Now what happens, this level is important because demand has come from this level. So price tests this level and springs it. You know, it tests here and immediately springs it. Okay, so now the picture that needs to be looked at is this. You have a rally on good volume, and then you have all of this is corrective low volume action right here. So it comes down, much lower volume, less than half, you know. So it does all of this, and then this is, I like this action. This is, it is effort. You know, they try to press this level, and there's a significant amount of effort here. So that's what this volume represents. There's your effort. But what else is going on in this effort? What's going on is that there's buying. There's actually a base here. And now I'm going to coordinate Wyckoff, which is something you're not going to see anyone, well, maybe they do, I don't know, but watch. This area, you're going to see it go down and start move sideways. You see this brick, or not brick, but the sideways action? From here, it's going sideways. Now this is a 5,000 tick chart, so it's going sideways. And it looks like effort, it looks like pressure, you know, it's not expanding, it's contracting, it's moving sideways. So what does this sideways action of 1, 2, 3, 4, 5 bars look like on a point and figure? Right? Watch. This is how it looks. See that? When it went there to that sideways action on the bar chart, it started moving sideways here and created that base. Those 5 bars equal this base on this point and figure chart. Okay? Now these bases, you know, just horizontal formations by themselves are important, but what's important is what happens towards the end of the base as well as like after the base. Here, green, 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 so that's a clue, it's an indication. But what's really important is this breakout right here. After the base was formed, you have this 1, 2, 3, 4, 5, 6 X's on heavy volume. This is the highest volume in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16 bars. See that? So this base followed by this breakout is relating to this base right here on the bar chart on the 5,000. This is 5,000 tick. So the base was established right here, and there's a projection. We'll see if it gets tagged or not. But I think on a higher, if I use a higher like setting, this whole area could be the base. You know why? Because accumulation, like that was a small point and figure chart, but a larger point and figure chart may show a much bigger base, and I think that that's what's going on when considering the fact that this is accumulation here. This is establishment of long positions. Okay, that point and figure chart, I just honed in on this little piece, but on a bigger point and figure chart, this entire area is potentially accumulation, and I think this wave here shows evidence because went to an important level. From that level there were buyers. So accumulation, which you could call a sign of strength, whatever. Your spring, test, 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 wide base of support, and over here was basically, I would consider this more of like a springboard, where the market is on a springboard, and now demand has broken out. See this? So, bang, demand has broken out of the base. I think this is the bigger base, and I just zoned in here, and I think we're going to continue markup. Now I don't know what's going to happen, but from my perspective, when I put all this information together, to me it looks like we have potential. I'm not going to say how high. I haven't done the whole count of this base, but it's we'll see. And the way I interpret it is basically you had a climax, lack of demand in this area, test, accumulation, spring, wide base or wide range of support. What do they call it? Broad range of support. That's the term that Wyckoff used. Broad range of support. Market is on the springboard. There's another, and from the springboard you have the jump over the creek, or demand just stepping in. However you want to interpret it. Like, the point is to view it from supply and demand, and what's going on, the motives of the CM. So to me it's quite clear this is accumulation, this is a springboard, and market is ready to launch. Alright, so next week should be a good week. This demand's in. We're going to see the test of supply. What may happen is, what I'm going to be looking for is when it gets to this area, is it going to move sideways? Is it going to upthrust, or is it going to absorb? Is it going to upthrust and come back, or is it going to hit this area and start absorbing, putting it on another springboard for launching into further markup and getting out of this range? The trends is just so bullish that you can't really argue. You can just see what happens, but I am more lenient to the long side. On the lower time frame, the opportunities that present themselves as well. First of all, this is this up and down accumulation that they were doing, like messing everybody up. So if you got in, great, but this was not easy. When they do go up and down and you see the averages, they're like all crisscrossing all over the place. It's difficult to figure out what's going on. So here there was an opportunity. This trade didn't work out because they suckered everybody in, and this was actually a base, a minor base, or the market was on a springboard here. Okay, this the 49 volume that came in was important. Okay, why? Because I was looking for low volume and found it over here. Delete all these lines. Okay, so this was it. And then towards the end of the day is when the trade set up, because what happened was it rallied, pulled back, there was a spring here. See that? It's a minor spring, which I like to see what happens after the spring. So it basically broke out. Okay, so you have this rally here, 11.49, almost 5-to-1 ratio. Pull back spring, further rally on 51. I like it. And then the test around the 50% back area, tagged it, bingo. And you see the averages are upsloping, so we're in an uptrend. But that's not the whole picture. You see, let me bring in something else. You have to coordinate all these principles. It's really not that, I guess you get used to it, but anyway. So the top chart here is the Wyckoff wave. The bottom chart is the Dow. Even though the Dow is going down and consolidating and it was under this trend line, this red trend line, even though it's doing that, look at the Wyckoff wave. Does this look bearish? No. Wyckoff wave is continuing higher. Wyckoff wave is continuing higher, even though the Dow is contracting. And in my mind, the Wyckoff wave leads. So this diversion, where the wave is up and this is going down, it basically set up. I was waiting for the Dow to turn around, and it did right on this bar. And it cracked out of the trend line on that green thrust. When it did that, I had a very high inclination that it would trend or go into the direction of the wave. This bar occurred after the market tested. See, it tested, then it started moving sideways. These are clustered closes and very tight formation. So it's done with its correction. It's telling me it's kind of like done with its correction, and then this thrust happened. Now I'm not just looking at one or two things. Like this thing happened. You see this? You see this bar? Look at how it looks in the point and figure. This bar, it's occurring, and the point and figure is also giving a very bullish indication on good volume. So it may seem a little difficult at first, but when you get them all, when you get these indications together, alright, Wyckoff wave is going up, pointed figure has built the base, and it's breaking out, and now the Dow is turning around with a high and close thrust, breaks over the trend line. You put it all together, and you get a very strong inclination of a bullish trade. So these are the real principles of Wyckoff, like tied together to trade. Have a good weekend. Bye.